Hello everyone, this is Tim Davis coming to you guys from the Bullish Bears team. Today is November the 18th, 2018, and this is my weekly long-term trade ideas update video. With that said, I'm going to jump right into it and jump right into my close positions. One thing I noticed on this past week, there's a lot of volatility that's still in this market. And with that said, I ended up revamping my entire long-term positions portfolio and tried to pinpoint positions that I thought would act a little bit better in this environment for some longer-term and short-term part-time gains. So with that said, I first started with the positions that I closed this week just because of some of the movement that I saw in the market and the way some of these positions were acting. I went ahead and closed some of these positions and opened up some different positions that will probably act a little bit better in this volatile environment. CGC was one of the positions that I closed on this past week. My original entry position on this one was at $37. Share price at $37. I exited this trade at when share price dropped to $36.80 on this past week, and I exited because of some movement that I did not like within the charts itself. So that position I exited. Also exited my bullish position on Disney. Closed with this position when share price was actually at 118. Did not like the movement after the earnings report, so I closed that position as well. DISCA, Discovery, also closed that position on November the 14th. Original entry price was at $33.75. Exited this trade at $32.50 with a small loss there. CL also exited that position. Entry price was at $63 when I entered. Exit on 11/13. Share price was at $62.50. Still bullish on gold. However, I had two positions and I wanted to lessen my exposure just in case the trade didn't go my way. So I closed one of those bullish positions, which is a spread that I had, a 120, 126 call debit spread I had that expires late next year. But I saw some other positions that I wanted to get into, so I kind of limited my exposure. Exited this trade. I still had one gold trade on, and I'll show you guys that. One GLD trade on, I'll show you guys that. Exited this position on 11/12/2018. All right. So those are my closed positions for this past week. All right, next I'll show you guys my current active trades. And I'm also show you guys one that it's like it's on my wish list to attempt to enter this week. And I'll show you guys that trade as well. Current active trades still have one more, some shares of CNTTF, even though the marijuana sector is in a massive pullback right now. Like I told you guys, I'm long-term bullish on marijuana sector, so I have a very small position in CNTTF as of right now. Had a big push a couple of days ago, it jumped 28%, but that's how volatile this marijuana market is until it settles. So I haven't bought any more shares. I'm still sitting on the same. I think I have 700 shares with this, and I'll more than likely be holding this for several years, unless the market dictates otherwise. GLT, still bullish on GLD. This is a share. This is a spread I entered when share price was at 116.25. First target goal is 119. Original entry date was on October the 19th, 2018. Type of trade entered was a 117.121 called debit spread, expiring 3/29, 2019 with a break even of 118.51. Hopefully we can get there before the end of this year, get to at least my break even of 118.51. That's my goal. And one of my newest positions I entered was a bullish bet on Newmont Mining. Share price at entry was at $33, with the first target goal of $35 for the share price. Original entry date on 11/16/2018. Type of trade entered, 33.36 called debit spread expiring June 21st, 2019, with a break even of 34.25. Again, my first target goal on this one is when the share price reaches 35. COG, and this is supposed to be COG, guys. This is a misprint. It says GOG. I need to change that as well. It's supposed to be COG, which is capital all. And entered this bullish position on last week when I saw some huge bullish action in some of the option spreads that I saw here. So I entered a bullish trade on this one, bullish bet on this one. Share price and entry was $25.50 with my first target goal of $29. Original entry date was on November the 14th, 2018. Type of trade entered here was a 26.29 called debit spread expiring April 18th, 2019 with a break even of 27.25. And I entered another bearish position on the on a bank stock. Looking at some of these, looking at the XLF of some of these bank shares, how some of them have performed over the past month or so, especially with rising rates. They haven't performed that well. So there's another bearish position on Bank of America. Their price and entry was $28 with my first target goal of $26. Original entry date was 11/14/2018. Type of trade entered at 27.25. Put debit spread expiring May the 17th, 2019 with a break even price of 26.25. And I'm going to show some of these charts to show you guys what I'm seeing within the chart itself. Next one I want to show you guys. Now, this is very interesting. The reason why I'm liking this trade. This is a short-term trade I'm considering entering on next week. Adobe. Considering entering a bearish trade on Adobe with the current share price. My share price goal at entry will be 240. So hopefully, you may get a bounce in this on this coming week. Share price reached to 240. I'll be entering this trade with my first bearish target goal at 220. Possible entry date would be 11/19/2018, so sometime in the coming week. Type of trade I'm considering entering is a 240, 215 put debit spread expiring next month, December the 21st, 2018, with a break even of 231. Now we're gonna start with this chart first and show you guys my thinking with Adobe. It's another tech stock. If you guys know, the tech sector has been getting hit heavy. So first of all, I'm going to show you guys what happened to NVIDIA. Then I'm going to show you guys a couple other tech stocks. And I'm going to show you guys some of these weekly charts. These weekly charts have been breaking down. This is a 3-year weekly chart on NVIDIA. As you can see, NVIDIA has been having a nice run for several years. And it's been trading off of the 50-day moving average for quite some time, for a long time. And it's been bouncing nicely. Well, since this earnings report, even before the earnings report started to falter, and as you guys can see, it has finally faltered below the 50-day and the 100-day, and is approaching the 200-day moving average after that earnings report that it had on this past week. So it has finally broken below its 50-day, and it's broke below its the 100-day. All right, and I'm going to show you guys a couple more of these tech stocks that have just been breaking down. Show you guys the Qs first. As a matter of fact, let's show you guys the SMH. And as you can see, the SMH, which is a semiconductor ETF, it's been struggling for quite some time ever since it reached these highs. It's been struggling to reach above this Fibonacci retracement level, and it started to break down here. So this broke below its 50-day moving average as well, and it's heading towards the 200-day. So that's another breakdown there on issues with this tech sector. Okay, let's take a look at XLK. think there's a lot of rotation going on here. This tech sector, it's just been getting beat up. And as you can see here, it's also faltering below. It's 200, it's 50-day moving average on the weekly charts. Okay. And we'll take a look at one more. Micron also drifted below. Oops, that's not what I wanted to do. Drifted below its 200-day moving average over the past several weeks or so. So with that said, and it's like all of these after earnings, they just been, not having a very, very good report or even acting negatively towards the report. Now, with that said, let's take a look at Adobe. Now, I can look at some others too, like Facebook and Apple, and they all been doing the same thing. So, but let's take a look at Adobe since it still have earnings report left coming up. Not sure what I have, but I think this is a good risk versus reward trade that could produce some huge gains. One thing I like to point out is a couple of things within the momentum oscillator, which is what I like to use to show momentum, imply volatility, and the MACD. A couple of things I'll point out in the MACD and other areas before we go on. The MACD, we'll see its momentum has been slowly dying out and trading to the downside in Adobe. That's some TTM squeeze, I'm sorry. Now, in the MACD, you see, anytime you get these bearish crossovers where the blue line crosses below the yellow line, that is a sign of weakness and it's a sign of a sell signal. So it's been trending down for quite some time. The momentum oscillator, it's been trading high for a very long time, right above this 50 line for quite some time. Right around that 50 line for quite some time. It's just starting to roll over below the 50 line now. These are some momentum oscillators, some momentum indicators I like to use to try to see overall direction and pattern. And normally when you see that movement, sometimes that means implied volatility is picking up, which is what it has done. Implied volatility is getting pretty high over the long term. All right. And then with that said, take a look at Adobe past 4 years and look at where it's trading now. It is still hovering above the 50-day moving average. With the rest of the tech sector, XLK, SMH have already faltered below its 50-day moving average. My bet is that between now and earnings, or even between now and the end of the year, that we'll see Adobe trade below its 50-day moving average now too. So I'm willing to take that bet. Now, one thing about options is you can risk less with the opportunity to make a substantial amount if you get the trade correct. So this is one that I'm willing to risk a bet on, a bearish spread on, with the hopes of a good outcome if this thing really breaks below this 50-day moving average between now and the end of the year. So a bet that I want to put on, and I showed you guys it already, and I'll show it to you guys again. This is a bet that I want to put on, which is a bet that it will expire in December. Short-term play. So what I'm looking at is buying a put debit spread, which means I'll be buying the 240 puts, selling the 215s with an expiration of 12/21. And if you look at it, in one thing that Thinkorswim does is that it shows you what your potential profit is, what your potential break even is. So if we was to put this trade on, I'm not going to enter it now, but I'm just going to show you guys potential costs, potential profits. So if we was to actually put this trade on, this semi expiration, and buying the 240 puts, and selling the 215s. So one contract here. This is just an average. One contract will cost you roughly around $8.23. You're risking $823, which is $8.23 per share. So a total of $823 for the contract. You'll be risking $823 with the chance to make $1,677 prior to expiration. And the break-even price would be $231.71. So if it drops down to $231.71, anything below that would be a substantial amount of profit. So the risk versus reward to me is, I think it's a pretty good bet with the way technology has been acting. Okay, so that's the trade I'm looking to enter. I'm watching to see how Adobe trades on this coming week, and looking to enter if price bounces up towards 240. Get a bounce towards 240. All right, so that's the bearish trade I'm looking at entering on this coming week. Now, let's take a look at gold again, and let's go. I'm sorry. Let's take a look at. I want to show you guys Adobe in my stockcharts.com chart. As you can see, it's starting to trickle down like the rest of the tech sector. After reaching its high, it's starting to trade down like the rest of the tech sector has. So I'm willing to take that bet. And as you guys know, it happened to NVIDIA. So if you look at the chart of NVIDIA, you can see how it rolled over like a lot of other tech stocks have rolled over. Okay. Now, let's go over to gold. As you guys can see, gold is still trading below its major moving averages on the weekly chart, but it looks like it wants to give us a little bit of strength to try to bounce off of this bottom trend line I have here. So I'm looking for a temporary turn bounce at least. And on the hourly chart, you can see we got sort of a bounce on this past week. Bounced on this past week, got back above 1208, and price is still heading higher. Like we may have a little pullback again this week. Hopefully stay above 1208. That'd be a good sign. So I'm looking to stay above 1208. Hopefully I'm looking to get back towards that 1240 before the year is out. This is how we look on the daily chart. Still trading below the 100-day moving average. If we can just break above that, well, that would be a good sign to at least head back towards 1240. So gold is still looking pretty good right now. So long as we can stay above that 1208, we should be still looking good there. So I'll continue to keep that GLD on for quite some time. All right. Let's take a look at the actual ETF I'm trading for gold, which is the GLD. And hopefully this yellow TTM squeeze bar on the daily is a good sign of some momentum going back towards the upside. So we'll see how this beginning week turns out. And one thing I want to point out, if I can pull up the chart here pretty quick, in Trend Spotter on GLD. Let's go back to my daily and weekly. So we're still trading above this trend line that I was interested in when we first got above it. Pull back halfway down and like be ready to rise again. If you look at this is the daily chart, look at the 60-minute daily chart. 60-minute. And you see how we pull back above a trend line here, pull back above the 50-day EMA. And got above this trend line, and it's like it wants to go higher. So GLD, I'm still bullish on this GLD position. And let's try to analyze Newmont Mining. Okay, Newmont Mining, it's been a downtrend for quite some time this year, and it looks like we started to bounce pretty good off this trend line down here, which is what really interested me. Nice bounces down here. And when we drop below here, so we started trading in between these two. And it looks like we finally trying to break above right here. After all that consolidation down here off of this trend line down here, we're finally breaking above it. So I'm looking to at least get back to this trend line here, which is around $34. So if we can get there in the near future on NEM. So this setup looks pretty interesting to me, which is why I entered this trade on last week. We take a look at it in TOS. Take a look at it on TOS. If we can just, this is a daily chart. It's trading below the major averages. But what I'm looking for is hopefully a move back towards this 200-day, which should be a good place to exit this trade or monitor this trade to see if we can break above it. So it's trending pretty well so far, with the opportunity to get back above the major moving averages. That's what the daily chart looks like. Hourly chart, what I saw, you can actually draw a nice trend line here, and you'll see an hourly chart they wanted to make a move back above see on this hourly chart. You can see how for about a little over a week we've been trying to break back above this level for quite some time. So we got back towards it, faltered, and we finally broke back above it. So hopefully we can hold that area and continue to rise and get back up towards that $34 level, which should be a good level to watch. And then after that, hopefully we can rise above 34 and go towards 35. So Newmont Mining is looking pretty good. I have this one out until the middle of next year, I think to May. So I got some time for this to play out, but I like this trend. It also mirrors Newmont Mining is also part of the gold industry. It's a gold mining stock, so hopefully this can pan out the way I'm expecting it to pan out. Sorry about that. So I entered that one with the hope that the bullish momentum will continue over the coming weeks. Okay, now let's take a look at Bank of America. One thing that I don't like about this banking sector is that its momentum has been slowly but surely dying out to me. Like it topped out up here around $33 a share back in early this year. And we traded back below the 50-day moving average, right around the 100-day. And with rising rates, it seems like it's just petering out. Look at it in TrendSpotter. Let's see. It came off of this trend line up here, and it's just been bouncing around, testing this lower trend line here, like we had another test here. If we break below this, it could be very well much be heading towards 25. So there was a test here. test there, test there, test there, broke below it here, came back above it, but now we get another test. So the key is, do we hold this level or do we break and go a little bit further? Looks like to me this thing it really wants to go lower. It has not tested this upper trend line in quite some time, and I don't think it's going to test it anytime soon. I think the least area of resistance is probably to the downside. So we'll see how that pans out. Now, one more look at it. BAC weekly chart and stock charts, and it's come off this overbought area twice. Come off it twice, and this time it's like it's really trending downward. And we're right at this critical 100-day moving average area now. And there's weakness showing. There's a lot of weakness showing. Look at some of these technicals. MACD area is attempting to break below center line. The ruling indicator is showing negative. It's not showing positive indication. Williams percentage R still like it wants to break down. So there's a lot of negativity within Bank of America. And another one that an indicator that I recently started following is the CTM on stockcharts.com. Basically, when you see it straight above in this green area, that's pretty much a sign of bullishness. But as it's starting to falter, it's starting to break below it. It's a sign of momentum dying out. So with that said, I entered that bearish trade on Bank of America, and I have it for a couple months. I think we'll still see some more weakness within the banking sector. Okay. Make sure I went over everything I wanted to share with you guys. Let's take a look at COG. COG. What I'm hoping to see in COG is a continuation of a bullish move. What I'm liking is I'm starting to see some bullish activity in the longer term charts in COG. If you look at you take a look at the MACD. I like when I see these bullish moves just below the zero line of the MACD, and with lines continuing to rise above the zero line, that's only a bullish signal. So that's what I like on the long-term charts with COG. And we can look at it also here on TrendSpotter, Capital Oil and Gas. And we just made a nice move above an area that it's dropped below, and it's been struggling to get back above it, and we just got back above it here. So I'm willing to bet that we can test this area again up here at 27 and possibly around 27 and possibly break above it. So we'll see how that pans out. All right, now let's take a look at a couple trades that I did not mention here that I exited on last week and show you guys. And I exited them because I had already made the amount of I already hit my long strikes. And show you guys just that this momentum in these stocks are just still certain ones. If you take certain ones, particularly within your, if you watch strategically, when we have so much volatility, you can pick some winning players. And to the upside and continue to win. I had a trade on McDonald's, close it out with a nice profit, but as you can see, I closed it out once we hit this level here. And what happened? We pulled back below it, and now we're breaking above it. So McDonald's could still reach this upper target, which is what I wanted to see in the first place. So it's still showing some bullish activity in McDonald's. It's one of the trades that continue to do well within this environment. And if you look at McDonald's over here, get rid of this. So these are the ones that I was in a couple of other videos that just been doing pretty well. And McDonald's continue to do well. Nice move up. It could see 195 to 200 easily, you guys, over the coming months or so. Another one that continued to do well was Merck. When I entered this trade, my target goal was 75, reached it, exited for profit. But as you can see, Merck also continues to break above the $75 level and may continue as well. This is some of the old trades I'm going over that did pretty well. As you can see, Merck is just continuing to break to the upside. So it could easily reach this target goal up here, around $80 a share over the coming weeks or so. All right, and one of the bearish trades that I normally put on every year, somebody else had mentioned to me last week, tell me, you got any long-term bearish trades you're looking at? And this is one I normally put on every year, and it's still performing the way it normally performs. It's still trading below some major movement, some major trend lines. This is BBY, Bed Bath & Beyond, and this thing constantly, every time it has a bounce, it just can't get back above major moving averages. It's like, if you look at the weekly, it's like it wants to roll over again. Can't get back, because MACD just cannot get back above the zero line of the MACD. Every time it makes a move up towards this 50-day, it normally pulls right back, as you can see here on a weekly chart. Makes a move up towards the 50-day, pulls back, move up towards the 50-day, pulls back. So I'm looking for another move up towards the 50-day, and probably will pull back again. So we'll see how that pans out. This is another trade that you can look to get a bearish bet on longer term. So just some food for thought. I wanted to show you guys those trades that I normally put on every year and only do pretty well. Okay, and I think that's all that I need to show you guys. Let's make sure that I showed you guys everything I wanted you to see. I think I have. All right, you guys. Hopefully, you guys saw some information that you could use. Hopefully, you guys saw some good trade setups. Keep in mind, you guys, this volatility is still with us. We may see a Santa Claus rally, which a lot of people call for towards the end of the year. But keep in mind that some of the major averages are still trading below some of the major EMAs, below the 50-day. So rallies back up towards those, the 50-day, 100-day could see sell-offs once it reaches to those levels. Nobody knows how it's going to pan out, but a lot of volatility within this market. Beginning of next year, who knows what can happen with so much volatility? Anything is liable to happen. So plan your plays wisely, especially if you're looking to take some long-term trades. Okay, Tim Davis. Sorry about that. Tim Davis from the Bullish Bears team signing off. Hopefully you guys got something out of this you can use. So those of you guys who don't follow us yet, please visit our website, www.bullishbears.com, where you can learn more about us and also learn more about our trade rooms, which is where I normally try to update a lot of these trades throughout the week if I make any changes. All right. Till next time, Tim Davis from the Bullish Bears team signing off. Have an awesome weekend, you guys, and I'll see you guys later on in the week in the trade rooms.